Most people in this industry spend more time filming their cars than they do their charts. I'm not one of them. I value my privacy and I value my results. While the headlines were screaming about Dow 50,000, my account was doing this. That is a verified cumulative return of over 7,000%. The market is at a historic crossroads. We just saw the Dow hit 50K, but underneath the surface, the AI trade is hitting a massive wall. If you're trading the same way you did in 2024, you're becoming liquidity. Today, I'm showing you the clinical reality of how I trade this volatility anonymously. Now let's take a look at a divergence. While the Dow hit its milestone on February 6th, tech stocks are facing an AI snag. Companies are spending hundreds of billions on infrastructure. For example, Amazon came out on their earnings and said they're going to spend $200 billion next year. The market is finally asking, where's the ROI on this money? If you take a look at the XLI daily chart that I have pulled up on the screen here, just the industrial ETF, you can see people are clearly rotating out of the AI and tech names and putting their money into safer things like the industrials. If we jump on over here to the QQQ and look at the daily chart, you see back here we have this big red candle here and this other big red candle right here. We just take a line and throw it right on those opens. You can see Friday the market pushed all day. It got to this level here and it ran into some selling pressure. We're going to want to keep a close eye on these levels here on Monday and see how things act there. But I think to keep in mind, this is where most traders fail. They buy the Dow 50K hype and get trapped in tech pullbacks. My asymmetric edge strategy doesn't care about the headlines. It cares about price discovery and institutional levels. Now let's get into a little bit of mechanics. I want to show you one specific setup that has been a staple during this move. If you notice, the S&P 500 has been struggling for 1% gains this year, but the asymmetric edge allows for vastly higher alpha because we aren't really trading the index. We're trading the internal imbalances. If we throw a little volume profile back on this previous high in October, you can see where all the volume is. You can see it's been previous resistance and sometimes it becomes support. This isn't just a guess. It's a high probability zone where I'm risking a fraction to gain a multiple. That is the only way you'll hit a 7,000% return. All right, let me get rid of this real quick. I want to pull something up for you guys. Here's just a little screenshot of some of our recent trades and the returns. I don't show you guys my face because my face won't make you money, but my processes will. There are no get rich quick schemes here. There are no hot alerts. What there is a community of traders who want the truth. They want the levels I'm looking at before the market's open. They want to know why I'm biased long or short based on the data, not the news. Now let's take a look at the NVDA 1 minute chart. On Friday, this gave us a great entry. We always like to mark off our opens and the previous day closes. These are two very important levels. As you can see, if I zoom in a little bit more here, NVIDIA got back to its opening level in the first 3-4 minutes of the market being open. Once it broke through the open, we wait for the retest. As you can see right here, there was big buying because of this wick. It pushed higher, and you had a beautiful trade from 176. It closed all the way up, pushed as high as 187, but it closed at 185. You just add a trailing stop, or you put it at your break even, and you have a worry-free trade all day. Let's get clinical. To hit a 1,127% annualized return, you have to stop trading the noise and start trading the structure. Let's look at the Dow this week. On Friday, we saw that historic 50,000 milestone. Most retail traders saw the headlines and chased the breakout. But if you look at the AI sector at the same time, clean this chart off for you guys. While the Dow was celebrating, companies like Amazon here were dropping 5.5% because of the massive $200 billion AI spending plans. These huge capex plans are really starting to spook investors. Investors are finally starting to ask where the ROI is at for all of this capex on the AI. This is polarized volatility. When one side of the market is euphoric and the other is panicking, this is where the asymmetric edge lives. Let's take a look at another setup. I drew this box right here to show you guys the opening range. We like to trade opening range breakouts. The tech sell-off pushed price into a major low volume pocket. Retail was panic selling. But if you take a look at the volume at the bottom, it's actually expanding. This is institutional absorption. I'm placing my entry right at this cluster here. My stop loss is just pennies below a previous wick. My target, the point of control that sits above us, where the market fair value sits. In this specific trade, I'm risking $1 to make 5 or 6. I don't need the market to moon. I just need it to return to its logical value. Because even if I'm wrong on the next 3 trades, this one winner here will keep my equity curve moving vertically. I track these clusters every single morning before the opening bell. When you see traders in our community talking about these same levels, the noise of the Dow 50K headlines disappears. You stop being a gambler and you start being a merchant of volatility. If you want to see the exact levels and these trade ideas and trade plans in more detail, join us in the Asymmetric Edge Discord. The link to get your name on the wait list is down below. The next round of invites will be going out here soon, so make sure you get your name on there. I want to show you guys the math that kills most accounts before they ever have a chance to hit a winner. It's called the math of recovery. Let's look at these numbers. If you lose 10%, you only need 11% to get back to even. If you lose 20%, you need 25%. But here's the kicker. If you hit a 50% drawdown, you now need 100% gain just to see your starting balance again. Most retail traders don't respect this. They take one revenge trade after a loss, hit that 50% drawdown, and essentially they're ending their career. To hit a 7,347% return like I have, you have to be more afraid of a large loss than you are excited about a large win. In the Asymmetric Edge community, our number one rule is protecting the downside. We always want to protect capital. We don't trade to win, we trade to lose better. If you can master the art of a small loss, the big winners will always take care of themselves. Now, I want to talk about something else that's important if you're trading options. Beyond the math, there's a technical hidden killer that wipes out options traders. This is called implied volatility. How many times have you found yourself right on a stock's direction, but your options are still losing money? You bought the call, the stock went up, and your account went down. That's called IV crush. Professional traders focus on Vega risk before they ever look at direction. While retail is chasing the hype of the Dow 50K, they're buying options when they're at their most expensive. The asymmetric edge system identifies cheap volatility. When the market is quiet and bored, we buy the insurance before the storm hits, not while it's raining. This is the difference between a gambler and a strategist. While you're looking at this table, I want you to realize something. Most people are taught to chase a high win rate. They want to be right 90% of the time. But in this market, especially with the Dow at 50,000 and tech showing serious AI exhaustion, being right isn't enough. Look at the asymmetric edge column. My system is designed to identify the exact moments where the market is mispriced. I might be wrong 7 times in a row, losing a small, controlled amount each time. But when that 8th trade hits, the one where I'm risking a fraction to catch a massive institutional move, it pays for all the losses and adds another 50% to the account. That is the only way you achieve a 1,127% annualized return. It's not magic, it's just simple math. Trading can be the loneliest game in the world. When you're sitting there in a drawdown, wondering if your edge is gone, your own brain is actually your worst enemy. That is exactly why I built this community. It's not about giving you alerts, it's about building a digital trading floor. Surrounding yourself with other serious traders looking at the same levels keeps you from making those dumb trades out of boredom. You also get real time analysis. We discuss how to stay positive during drawdowns and how to handle the massive swings of the 2026 market cycles. You also get tool sharing. From economic calendar bots to custom indicators, we provide the utility that saves you hours of prep time. You don't need a high win rate to be successful. You need a high quality process and a team that holds you accountable. If you want to treat trading like a professional business, the link to our community is in the description. We operate on the edge, no hype, just results. Click on the link and get your name on the waitlist for the next round of invites. The Dow at 50,000 is a milestone for the world, but for us, it's just another level to trade. Stay disciplined, protect your capital, and I'll see you in the Discord.